the fundamentals of the market. Sunil, hi, thanks for joining in. Well, I have to begin my conversation by asking you about what's happening to these companies with high debt. What stands out is Reliance Communication. It's down 18.5% as we speak. Your sense in terms of the deleverage play or the telecom play, which one is hurting it the most?
I think it's a telecom play, because it's not about the leveraging part as much as the fact that I think the whole RGO thing came and reset the rules of the industry, and different people are fighting with deeper pockets. So I think everything in the margins, the consumer is the beneficiary, but I think from a markets and company owner perspective, there has to be consolidation. I think that so many players can't survive at this rate. So this is more of the telecom disruption that's happening, rather than the purely the debt issue, right? Because the business had been going on as usual, this debt could have been serviced. So it's.
In your funds, I mean, do you own stocks in the group? I mean, from the ADAG group?
Yeah, a little bit.
A little bit, okay. Well, let's just talk about something else, which I think would find resonance, a lot more resonance with our viewers. Pharma. Sun Pharma, high was 1200, stocks at about 500 now. I mean, as a mutual fund manager, how do you look at it, and what's the view really from here?
See, we've been underweight generic and product companies for quite some time now. We believe that there's value in the overall pharma pack in the healthcare and wellness kind of stories. But the product and generic, both from a domestic play and international play, both are facing severe challenges. And these challenges are arising from multiple fronts. One is the FDA related issues, each plant. Second is the pricing control, in Obamacare being washed up and a new healthcare plan coming in, and India also the drug pricing control. So whenever you are dealing, let's say you invested over 10 years to build a cancer drug, and suddenly people say cancer is a common man's disease, so you've got to give it away free or close to free. So I think at a product and a generic level, there's a huge amount of, traditionally the Indian pharma companies built their business on the basis that they discovered a new process to crack the same product, and the same thing is now coming back to bite them, because now those products, when they go off patent, they effectively become generics. They are now selling in the retail markets. But now when the pricing pressure comes, that even that prices, the costs are not being recovered, and that's where the margins are getting affected. So we think that there are going to be these headwinds, but in the long term, we believe that these things will survive.
Are you telling your analysts, your sort of number crunchers, to say, okay, get your heads together, look at these businesses seriously?
Yeah.
Are we getting to that point or no?
No, actually,
no interest.
See, so I'll tell you what, when you said we are underweight these things, I'm not zero. So I'm still holding some of these. Related to the benchmark, I'm underweight. At the same time, in specific cases where I have a close-ended long-term fund, I don't know whether the last time I mentioned the show, we closed a value fund, which collected just under 100
we spoke
crores.
about that.
So we are allocating decent to IT and pharma and that, because it's a 4-year close-ended. So we believe that this business will ultimately come out and bounce back. So it's a good time to buy, and these corrections are times where we pick it up in those funds. But in a general diversified fund where I have a daily report card NAV to do, it's kind of a bit risky at this point of time. On top of it is the dollar pressures,
Are you confident about, say, an NPA resolution in FY 18-19 formidably? The reason I ask is that we're talking about these leveraged companies and a sector derating or a sector change which is taking place, say, in the telecom space. So your sense from a bank perspective, would you be confident of buying banks?
Yes, we are confident of buying banks, but I must caution you on the word NPA resolution. NPA resolution cannot happen without pain. And somebody has to take that pain. Now, whether you do that by government capitalizing these banks to pain, or you merge banks where you unlock hidden assets like real estate, which these banks have held for a long time, revalue them at the current rate so that in a merger, you're able to wash them down the drain, or the bigger bank picks up the hit, like in SBI and the Southwest Bank. So I think the pain cannot be wished away, right? When you say NPA resolution, it's about, can the uncertainty of the pain be capped and brought to notice, right? So the Insolvency Act, the Bankruptcy Act, it's all about recognizing the pain. So somebody has to take the hit, and sometimes it's going to be the capital market, sometimes it's going to be the debt lenders, and sometimes it's going to be the owners of the business. So I think, yes, we do see a significant progress in resolution over the next 2 years, but that doesn't mean that it's a resolution means that everybody walks away a winner. There are going to be pain, and it's going to be, really going to be hurting some people out there. No.
Okay. All right, Sunil. We're going to leave it on that note. Thanks